the Indian equity market, the kind of rally that we've already seen in India. I won't ask you to give me a Sensex year-end target or anything of the sort, but people are now talking about the fact that this is a bull run like we've never seen before that we're seeing currently in the Indian market, whether it's 30,000 by the end of the year or not, another 25 or 30% appreciation over the next 1 year or not. I'm not asking you for levels, but what's your own take about the strength of the Indian equity market story today?
I think if India fulfills its promises, which I stay confident that this government will, you will see the Indian equity markets being on the radar of not just Indian investors but global investors over the next 18, 24 months. So I don't know where the markets will be. All I know is that if India manages the controllables, the externals will chase where growth is. But if the world were to collapse around India, on one of those disorderly moves or crack-ups in Europe or hard landings in China, then I feel India doesn't stay uncorrelated. So it's a little amount of the uncontrollables to India as much as even more its uncontrollables.
Oh, absolutely. The global factors are going to dictate fund flows. But, you know, speaking of the controllables that you were just talking about, interest rates, and we have seen the scenario change just a little bit as far as inflation is concerned. We don't know whether that gives the RBI comfort enough to move as early as the start of 2015 or perhaps, you know, towards the end of this current financial year. What's your own take as far as interest rates are concerned?
Let's remember that India has not had a 6% inflation since 2006. So the confidence of hitting that number by Jan 2016 needs to be somewhat more sober than what the immediate next 3 months will suggest. Also, Shereen, I think it's important to recognize that while the industry may be clamoring for lower interest rates, if India has to fund its manufacturing, infrastructure, urbanization, it needs positive real rates of interest. India has had negative real rates of interest from 2008. And in fact, amongst the fragile five of India is not a member, but even if you take those 5 countries, India is probably the worst negative real rates of interest. So I think one has to prudently step back, and while the bias should be on an interest rate reduction, and by the way, we think China will reduce interest rates into mid-2015. We think there has to be greater confidence build-up between the government and RBI that inflation is on a sustained basis coming down into the 6 handle.
So you don't really expect any significant reduction?
As a result, I think my bias on interest rate reduction in India is more in the second half of 2015, while many would argue that it could happen earlier. But what we do need is India having positive real rates of interest so that saving rates in the country grow and the currency stays relatively stable to what may be a U.S. rate hike.
You know, I'm glad you brought up the currency, because this was a conversation that we had last year at the same time when people were talking about 70 as far as the rupee was concerned and even higher. What's the call now as far as the currency is concerned, given the global risk factors, given the domestic triggers that we've just talked about?
So I think the bias of currency will remain on the downside. You will see the currency, I mean, my view is the currency will see a 65 before it sees a 55, if at all. And that's not bad, actually. I think what we need is more stability in currency. And if you see the currency move 2, 3, 4% by the interest rate differentials from now into the 60s, 62, 65s, that's perfectly fine, right? And I wouldn't be too upset about that. What you don't want is a disorderly rupee, which suddenly starts to gyrate at either end, right? And I think there's a lot of confidence in both the government and especially so the RBI governor that we'll have currency stability. The risk, however, and let me just point to the risk of that, the risk is that many corporates who are dollarizing their balance sheets in India are feeling so confident about the currency being stable that they're virtually leaving it unhedged. And I would advise many corporate CFOs not to do that. Given where volatility is globally, right, and could come back, let's not count that the RBI governor will hold the currency stable.
he can't hold all keys. He can only hold the key that he controls at this point in time. But, you know, speaking of the RBI and speaking of the governor and regulation, you were talking about Deutsche Bank's plans, which I do want to talk about in just a minute. But in terms of regulations, you know, deepen the corporate debt market. I mean, we've heard this so often that it's sort of become boring now. So we're hoping that finally we will start to see steps being taken to get moving on that front. But in terms of financial sector reforms, insurance is just, you know, one of the pending ones. What is it that you would like to see?
Actually, a lot of good things have been done. Go back a year ago when we spoke. Straight after that, there was the FCNR scheme.
Yeah.
There were the gold imports getting curbed, right? There was a monetary policy where he stood against the wind, so to say, right? And as a result, confidence started to come back.
Yeah.
Right?
But that was more a sort of reactionary...
But let's see what's happening now.
Yeah.
He started to move in terms of differentiated licenses for very specific needs of the country on inclusion, payment banks.
Right.
Right? The focus he's put on stressed assets and on management of NPAs, even though there's lots which needs to be done in terms of the bureaucracy, in terms of the bankruptcy law, right? I think he's got his buttons on absolutely the right ideas. And still, I think there's a lot to do. We need to create more financial inclusion. We need to have foreign banks participating much more in India's growth.
Are they going to? I mean, you know, again, this is a conversation that we've had with foreign banks over the last several years, whether it's the issue of subsidiarization or so on and so forth, but we really haven't seen that participation change, have we? So, is it likely to finally?
So, many foreign banks are reassessing the global ambitions because the cost of being global has increased dramatically, both as a consequence of compliance and as a consequence of some regulatory walls which have been put up by each sovereign around the world. And frankly, if there is subsidiarization in India, it's not the exception. Many other countries would have the same ideas. So I think if foreign banks, however, India will remain strategic to most of the foreign banks who are deeply invested right now, including ourselves. I think as greater clarity comes on priority sector lending and how foreign banks can participate in that towards inclusion, I think foreign banks will be willing to have a deeper and a wider footprint in the country.
So let's now talk about Deutsche Bank's plans for India. Given the fact that you feel extremely confident about the Indian marketplace, what can we expect in terms of additional investments, in terms of hiring further in India, growing your presence here?
So India is one of our core markets globally. It's a very strategic market. It's interesting that when I look at Asia-Pacific in totality across 16 countries, that's roughly about 25% of the bank's global P&L in 2013. And within that, we have 5 markets who are very, very core to Deutsche Bank. And India is well amongst them. And, you know, certainly there's China there, there's Australia, there's Japan. India stands out as one of the very core strategic markets. And we will invest more in the country because we do think the financing needs of this country will grow from here, so we're willing to put more balance sheet, more risk-weighted assets on the table. We do think that as GDP grows, the working capital, the transaction banking businesses will come off. Happy to invest there. Retail, we will build out our mortgage books, but will we proliferate to opening more branches? I think that will be awaited till greater clarity comes on the priority sector guidelines and some of the other measures. India stays, as I said, deeply strategic within a region of Asia which is highly strategic to the firm. And some of the recent events around India just growing our confidence even more. So
do you see India outperforming the Asia-Pacific basket?
Into 2015 and 16? As much as India underperformed in the last few years, not just with Deutsche, but as an industry, I think absolutely. I see India outperforming many of the other countries in the region, and for good reason. And we are very fortunate. We have a deeply embedded history here. We have a great management team on the ground, and we have the confidence at a board level to put more capital to work. So we just want now Indian entrepreneurs to get more confident of putting new capex on the table, which we'd be very happy to finance. We want global MNCs coming into India in much larger measure, as they've done in China previously. And Deutsche Bank will play right into the center of that.
Well, thanks very much. Appreciate your time. Thanks for joining us here on the special edition of The Appointment.